Hey everyone, welcome to another segment of Inside the Markets. We're going to detail everything that happened in April and what we can look forward to for the month of May. So April check-in, first and foremost, tariffs whipsawed all markets, large unpredictable swings across every asset class, cryptocurrency, S&P 500, gold volatility, you name it. The entire world economically was completely thrown into a rate. Inflation re-emerged as a concern, undermining investor confidence. Bitcoin may be decoupled from TradFi. It showed relative strength versus equities with a strong recovery at the end of April after a pretty sharp drop-off. Rate cuts are postponed. Expectations now shift for the second half of 2025 or later until we see any changes there. Political tailwinds for crypto. President Trump has declared an end to the US government's war on crypto, the debanking, the hyper-regulation, you name it. Some optimism there, but it has all taken a back seat in light of all the larger economic and political changes around the world. Gold's trading at $3,345 per ounce, reflecting continued demand for traditional safe haven assets, all while Bitcoin, as of the time of recording, is trading around 95,000 US dollars, highlighting its resilience and rising demand amidst macro uncertainty. So, the crypto market as of May 2025. So in summary, we can show that there has been performance growth in major crypto assets at the end of April and as we've gone into the month of May, but we can see some pretty tumultuous pain throughout the early stages of April. We did finish the month with Bitcoin up 14% from where it started, ETH 19, Sol 47% recovery from its bottoms, and Doge up 67% from its lows. There were scary lows. For a second there, it looked like Ethereum would break under $1,000. Solana floating around $100. Bitcoin, people were calling for $60,000 retracement. But we had a strong recovery from the bottoms that we saw. So the market resilience continues despite the macro headwinds. Whilst the broader markets are ebbing and flowing in terms of volatility, crypto is really starting to solidify itself and have a bit of a gradual comeback, which if you look at previous market cycles, this is not unheard of. It's certainly not unheard of for cryptocurrency to draw down 30% more than 1, 2, 3 times within a bull market period. During that period of time, of course, there is extreme fear and pandemonium in the space, but then all of that subsides in a matter of days once the market appears to be green again. So some notable late April gainers included Sui and DeepBook. This really emphasizes that news catalysts can still drive performance even when the broader economic landscape looks depleted. We saw multiple 100% gain days for some of these altcoins, and that was amidst days where Bitcoin was actually not performing so well. So that there is clearly still traders out there trying to snipe out good opportunities in the space, try and buy the rumor, sell the news as tokens are listed on major exchanges or major headline events and upgrades are coming about. It's good to see, although it is becoming rarer and rarer this cycle around. The market remains fertile for unique opportunities, particularly among newer or structurally differentiated tokens. All right, so getting into tariffs. Tariff tensions roiled markets. Geopolitical risks escalated, particularly due to the US-China tariff war, which we're currently in the midst of. Market volatility has increased to levels we have not seen in pretty much since the global financial crisis, or well, at the very least, since the COVID dump that we had during the Biden administration. This is affecting equities, bonds, cryptocurrencies. Investor sentiment has been impacted. Extreme fear and concerns of global trade dynamics are plaguing the industry. Equities whipsawed, but hints of a bottom. So here we see the Nasdaq RSI reading and price action. It's curious to note that over 50% of Nasdaq stocks are trading with an RSI less than 30. Anything less than 30 typically indicates that an asset is mass oversold. So the majority of the Nasdaq did appear for these periods of time to be structurally oversold. We also saw major indexes swing 13 to 15% within the month. This is unprecedented. Again, something we have not seen since the COVID market reaction several years ago. Technical indicators suggest a potential market bottom might be forming. It's worth noting that Warren Buffett has a record cash position with Berkshire Hathaway holding $334 billion in cash, around 30% of their total assets. Jamie Dimon also sold 230 million US dollars of his shares in JP Morgan, very well timed right before this tariff war collapse. There's a lot of cash on the sidelines and there's a lot of speculation saying that the bottom might already be in. No US rate cuts until the second half of 2025. Of course, if you're following Twitter closely, or X now, you can see that Trump has been putting a lot of pressure on Powell to cut interest rates, cut the rate, and allow more breathing room and potential economic growth in a time of tumultuous fear. We have not seen that, and indications and prediction markets are suggesting that is something that won't happen on the 7th of May. We're likely to have rates hold steady, and then potentially in the second half of the year, we might be able to see some more traction there. The market is pricing cuts for the second half. It's a delayed pivot due to persistent inflation and strong labor data. Consumer pessimism is rising as a result of this, and recession expectations in the US surged throughout the month of April, with 72% of Americans viewing a recession as somewhat or very likely. It's worth noting that these prediction markets that display a lot of the live prediction movements on things like recession's probability, they do move daily. And in a market like this, they can swing dramatically in both directions. So it's always worth taking the information at face value. The shift in sentiment may lead to softer consumer demand and could influence future Fed decisions despite the sticky situation and inflation fears. We're now going to get into M2 money supply and its continual growth. Will Bitcoin price follow? A lot of analysts speculate that historical data suggests that M2 money supply and Bitcoin performance have complete parity. There is a lot of periods of time of which that can be said. There are periods of time where you can suggest that it is not as simple as that. The chart here showcases that this money supply is trending upwards. Historically, most of the time, M2 growth does precede Bitcoin rallies. This is namely because increased liquidity could drive future crypto upside. More liquidity in the market means more capacity to invest in asset classes such as Bitcoin. Bitcoin with a limited supply is ripe for the upwards momentum that can come in such economic money supply environments. Bitcoin diverging from TradFi. This is an interesting one. So global corporations now hold 746,302 units of Bitcoin, 70.7 billion US dollars worth at the time of recording this video. Institutional confidence is categorically increasing in Bitcoin. If we forget the price of Bitcoin and we just take ourselves back 2 or 3 years, think the period of FTX downfall, Celsius downfall, the idea of Bitcoin as an institutional investment that major companies would have on their balance sheet was frankly almost idiotic to consider. Now with the rise of ETFs, greater custody opportunities out there in the space where investors can feel more safe and empowered, we are seeing mass institutional uptake and adoption and empowerment, namely with Bitcoin, but with some other cryptocurrencies as well. And this is happening irrespective of the short-term price performance. It's a good one to keep in mind because if the world is having greater adoption of Bitcoin and Bitcoin is leading charge as the cryptocurrency leader, we can certainly form a hypothesis that that can be quite positive for the rest of the market as well over a long duration of time. Bitcoin is increasingly perceived as a treasury reserve asset decoupled from equities. As of early May, with Bitcoin priced at $95,000, it's shortly approaching all-time high, and largely because of the institutional demand surge. Gold, meanwhile, at 3,345 US dollars an ounce at the time of recording. Gold, all-time high. Bitcoin getting very close to all-time high, could very well hit it in the month of May. This does reinforce Bitcoin's role as a parallel inflation hedge. Again, an asset that's only just over 10 years old, it's far too early to make such broad claims. But with the price movements we're seeing currently, it certainly is a case to be made. So is the crypto turnaround here? As we can see on the left, weekly crypto asset flows took a steep nosedive, a catastrophic fall from grace over the month of April. And during this period of time, we've got clients freaking out. The phones are, every single person is on the phone every hour of the day at Caleb Brown. And people are freaking out. Extreme fear, this is the end, the market is done, tariffs have ruined it, there's no coming back from here. That's what we're hearing on the phones just 2 or 3 weeks ago from now. and it's had a complete change. Consumer sentiment and investor sentiment with cryptocurrency changes like no tomorrow. On Monday, it could be the end of the world, and by Wednesday, people are telling everyone about how great their crypto holdings are again. It's really important we hold ourselves accountable to the vast emotions that a volatile 24/7 nascent asset class can enforce upon us. So what we see here is things are looking good again. All of a sudden, asset flows are back in the positive, and they've actually recovered a lot of the outflows that we saw in the previous month. Market dynamics suggest potential turnaround. Digital assets are gaining traction. Analysts highlight the role of institutional adoption contributing to this market resilience. In a recent interview, Binance founder CZ was asked, "What is the rot in the industry?" by Throck from Rug Radio. He responded, meme coins. Meme coins are predominantly the rot in the industry, with 99% of them not giving a return to the investors, if we can call them that, who take a gamble on these assets. Maybe I will take back the word assets there. So historically, the probability of failure with meme coins is so great, yet people are throwing money at them for that quick buck, that punter's hope of making that 100x that you might hear about with some Twitter headlines here and there. So CZ mentioned that these meme coins are drawing attention away, and they're drawing capital away from the fundamental building opportunities that are going to define the future of this industry. If we can see, with the shakeout that we've currently seen, we do see that the amount of money flowing through meme coin trading and the kind of gamble-fi side of the industry does decrease when the markets are humbled the way they are now. Does that mean that investors and cryptocurrency traders are forced to take a step back and put on a more rational strategy to what they want to do for the rest of 2025? I certainly hope so. At Caleb Brown, we definitely believe so. That's what we see with our clientele. And if that is the case, maybe cryptocurrency can start consolidating into a more robust, intelligent investment ecosystem away from the more gambling side of things. Time will tell. Retail sentiment rebounds from extreme fear. So I've talked about this a few times today. The fear and greed index is probably one of the most important things to look at. Historically speaking, if you purchase when there is extreme fear all the way down to the left of that chart, dark red, the world is falling, life is over. If you buy during those periods, particularly if you dollar cost average, and then you sell during extreme greed when things are glaringly green across the industry, and your Uber driver, your postman is speaking about how their cryptocurrency gains are making them a millionaire, that's when you want to be selling. So we're now in that neutral point again, which is quite healthy. We're quite happy with that. But again, it's just a constant reminder. You want to be positioning yourself so that you don't have an emotional investment in the space, and you're buying when things are bleeding and you're selling when things are booming. Do with that information as you see fit. All right, what's up with Ethereum? Ethereum has certainly been probably the most disappointing asset class in the cryptocurrency space for the better part of the last 3 years. It's the second largest by market cap cryptocurrency, and Bitcoin has outperformed it probably 4 or 5-fold over the course of the last 2 years. In fact, if you traded your Ethereum into Bitcoin at the end of the last 2021 market cycle, your life is perfect right now. But if you're like me and you held on to a lot of your Ethereum, then you'd rather not talk about it. So ETH closed April with a modest decline, still facing year-over-year losses. Anticipation builds for upcoming upgrades, which could enhance network performance. Market awaits clarity on Ethereum's roadmap, influencing investor sentiment. And Ethereum, they really need something innovative and new. Since ICO mania of 2017-18, NFTs that led a lot of Ethereum's utility and adoption in the 2020-2021 market cycle, since then, I really can't think of a use case that has driven mass adoption towards Ethereum. In fact, when I think about it, most of last year was an outflow from Ethereum network into Solana, Sui, BNB, other networks where I may not call it innovation, but calling a spade here, the meme coin saga of 2024 drove most of what was happening in the market and circulating the headlines. Now that happened on Solana. Solana capitalized on that and was able to reach all-time highs come end of 2024. Ethereum went to $4,000 US, stayed there for a couple of days, and has just been on this slow decline back down. It really is disappointing. Ethereum needs to solidify itself as the smart contract leader of the cryptocurrency space, and there needs to be use case, innovation, and excitement and leadership from the project. And frankly, we just have not seen that for some time now. Quick one here, with the market volatility, if you do have people that you want to refer, go onto our online portal, check out our Refer a Friend program there. It allows any of your friends and family to get a fast-tracked application process and work directly with your broker. I'll also mention here, I will personally be in the USA over the course of May and June. I'll be speaking at XRP Vegas. So if anyone is around in Vegas during that period of time or is an XRP investor, I'll be sure to meet you and say hi, grab a drink or something like that when I'm over there. Otherwise, we'll move forward. So what's in store for May? So the markets are pricing in that there will be practically no decision on the 8th of May. Things are likely just to stay as is. Quite a few things here. So first and foremost, I thought this was an interesting statistic. On the 3rd of May, the S&P 500 had recorded 9 consecutive days of closing green. This has not happened since 2004. It's wild to think that in Trump's term so far, we've seen the highest highs and the lowest lows and volatility that's unimaginable. To record things like 9 consecutive days in the S&P 500 of sheer growth after seeing some of the steepest declines we've ever seen in the first month of a president's term, this has got to be unprecedented. I think I'm living future history books right now. This does reflect improving investor sentiment despite macroeconomic headwinds and uncertain Fed policy. The next FOMC meeting is May 8, with consensus expected that rates will be held at 4.5%. Markets are highly sensitive to any change in tone though, so watch for any dovish signals or inflation commentary. As we know, all it takes is one thing to be said by Trump or Powell or whoever it may be, and the markets could easily move 5-10% in the altcoin market, and Bitcoin can easily move 2-3% in the matter of minutes. It's not unprecedented. It's actually kind of common practice in this market of 2025. A surprise hike or strong hawkish language could rattle both equities, which of course will have a flow-on effect to crypto. The altcoins and Bitcoin as well has largely mirrored the tech stocks of the S&P 500. Although we are seeing Bitcoin start to decouple a little bit, but largely what we see is no matter what news is coming out across the United States, if the tech stocks are tumbling, crypto is probably tumbling alongside it and vice versa. So crypto policy developments. Trump's administration plans to introduce clear regulation for stablecoins and market structures, aiming to stimulate investment and innovation in the crypto sector. Amidst all this volatility, one thing that we cannot deny, whether people love or whether they hate Trump, if you're a crypto investor, man, is he giving empowerment to the industry. The idea of having a future where people like myself personally are not debanked in the industry, where we can be empowered and work with banks and major financial institutions, have regulatory clarity, embrace new technologies, that's a future I'm excited for. And if it's necessary for the market to be quite volatile between now and then, well, so be it. All right, US trade policy. Tariff developments remain a wild card with potential to disrupt the markets at any second now. Any headline regarding particularly the US-China tariff war, you can put a bet it's going to absolutely change the way the market starts for that day. So monitoring geopolitical negotiations as outcomes could influence asset prices. Crypto markets, namely Bitcoin, may benefit from this uncertainty, positioned as an alternative investment, a bit of a safety net. At 95K, it certainly is positioning itself like that, and gold, as we know, has become the go-to safe haven during this period of time. Some interesting back-of-the-envelope maths from macro strategist Luke Groman suggests that if tariff policies are executed successfully, keyword successfully, then we could use them to offset personal income taxes for the bottom 90% of income earners in the US. If that is a strategic play there, then this could all work out to really make Trump quite a popular figure across the US, more popular than he already is. There are a lot of interesting angles that people can take with the uncertainty of these vicious and intense tariff talks happening around the world right now. But a lot of people are speculating that the end outcome would be quite positive for the USA. This would mark a significant shift in fiscal philosophy, leveraging trade fiction as a domestic tax relief tool. I'm very curious to see how this all plays out. So some other developments that may shape 2025. Regulatory landscape evolving with discussions on stablecoins and digital assets. Liquidity trends to watch as M2 growth may impact asset valuations. Geopolitical risks persist and will always govern the way that markets go up or down on a daily basis, necessitating vigilance in portfolio management. A lot of our clients now, they're making sure that they are worlds, leaps and bounds away from any form of leverage. They're dollar cost averaging into the market. They're planning out exit strategy, and when needed, if they're well in the green on a position, leveraging things like a stop loss to make sure they can take some profits on some of the coins they're well and truly up on. So having a strategy and being vigilant when we know things can move so fast is key in this time of the market. Strategic initiatives, the US government's creation of a strategic Bitcoin reserve and digital asset stockpile marks a significant shift in national financial strategy. There has been rumor of a gold to Bitcoin pivot from the US government. If that is to happen, then I think that we will be seeing new all-time highs in Bitcoin and the market will rally dramatically, but we will see. I think no one knows exactly what's going to happen in this market, and we're all just being patient and waiting. So that's all for today. I hope this has been enjoyable and informative. Like I said, I will be in America and speaking at XRP Vegas at the end of May, and I'll be traveling from the West Coast throughout to the East Coast before and after that as well. So if anyone's a client or if they're looking to get an account with us, please reach out so we can help out. And I look forward to speaking again next month. Cheers.